Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps that were in play today. So these are the penny stocks. First up we have Naked Brand Group here, ticker symbol NAKD. Congrats to everybody that caught the video last night. I know it came out a little bit late, but I did alert that this was setting up. It was the bounce off of the 50-day simple moving average yesterday that made this interesting, and the close above EMA4. That pink line had been resistance. The last close above had been back here on July 3rd, and so that close above yesterday was signaling it was heating up. It only had 70,000 shares yesterday. Today it traded 3.6 million shares. It had a big gap up open. It needs to break the closing price here on the 28th of June. If it can bust through that resistance level, you have the closing price here on the 20th is the next key level to break. So yeah, 855 and 650 are the two key levels above. If it fails to get above the 650 resistance zone, the middle Bollinger Band at 491 is the key level to hold. Okay, take a look at AYTU. Very nice move today, closed up 21%. That was a bullish close above the green line. That's the 50-day simple moving average. The last couple times it tried to close above that level, it failed. So the close above today was a bullish change in trend. Now we're looking for a break above the 100-day simple moving average at 40 cents here. If it can break above that gold line, that'll signal it wants to head higher. It just needs to stay above this 50-day simple moving average at 31. If it dropped below, that would signal it's not ready to go, and consolidation needs to hold that level to be a good play. And then it also needs to break above this closing price here on July the 12th. It hit that level today and pulled back. So this 38 to 40 resistance zone is going to be the big level to break. Okay, take a look at LBY. Nice move today, closed up 35%. This is breaking out on the daily chart. As you can see, it broke out above the closing price here on the 26th of June. That did signal more upside potential. It also closed above that 400-day simple moving average up here at 887. These are the two key levels to hold. You don't want to see it drop below that 400 simple moving average. If it did, it definitely needs to stay above 840 and not get back in that previous channel. Notice the big volume spike down here. On the weekly chart, you can see the next key levels to break. You've got this October 2017 closing price here. That's going to be the where it hit today and pulled back. And then if it can bust through that, you have the 100-week moving average at 1015. That's going to be the big level. If it could bust through that 100-week moving average and close above for the week, that would signal it wants to keep this strong uptrend going. If it stalls out here, it could pull back and test that EMA4 at 836 support zone. Okay, take a look at CEI. Nice move today, closed up nearly 41%. It had, they pulled it back, they walked it down on very light volume. It had multiple red candles in a row. Today, bullish one white soldier reversal pattern formed. It closed above EMAs 4, 8, and 13 and that 50-day simple moving average at 40. As long as it stays above 40, it's in play. If it drops below 40, that's going to signal downside risk. To the upside, it needs to break back above that middle Bollinger Band at 45. If it can close above, you have the 100-day simple moving average just above at 53. That's the last level that it hit the last, it seems like, almost got to that on that one. But the 100-day simple moving average has been the profit-taking zone. So if it hits that level and fails to break, look to lock in gains. Okay, take a look at GST here, closed up nearly 4%. This has been on a nice run, nice 3-day move. It is stalling out though here at the bottom of the gap resistance level. Today the gap filled. You can see this red line here is the top of the gap. It hit EMA 8, the next resistance level at 20 cents here, and pulled back. It has to break above this 18 resistance zone. If 18 remains resistance and it drops below EMA 4 at 16, that will be a sell signal. It has to hold 16, break through 18, and then get through this 21 resistance level. If it does that, then you have the next gap here with the bottom of the gap in 27, 28 level, and EMA 13 at 27 is the next two levels to break. Okay, let's look at GSAT, closed up nearly 5% today. This is another stock that's been on a nice run. It had closed above that 50-day simple moving average and middle Bollinger Band on Friday. That was our clue that it wanted to head higher. It followed through yesterday with a nice push. It hit that 100-day simple moving average the last 2 days, that gold line at 60 cents. It needs to break that level in order to head higher. Today, this is looking like a doji to me, and a bearish doji star reversal pattern. And so you have to be on the lookout for of the candle is working back into the bands. Anytime you get a doji or a hammer formed during the uptrend, especially on a gap up open above the upper Bollinger Band, which is down here at 54, many times that signals the candles will work back into the bands. Right now, you want to see EMA4 at 53 support hold. If that broke, the 50-day simple moving average at 50 is on deck. It has to stay above that 50-day simple moving average to remain in play. If it dropped below that, the chart would be broken. Above 60 is going to signal more upside potential, and then you'd be looking for a run up here to the closing price back in June on the 17th, it looks like, here right around 79 cents. Okay, take a look at RNN. Nice move today. It's a very thinly traded stock, closed up 9%. It did close above the middle Bollinger Band. As this chart shows, the dotted purple line has been the tough level to turn it into support. If that level holds at 147, it could get a new uptrend going. You want to see it break above the high close resistance in the current trading range, which is the closing price on the 10th. You've got this sideways channel. It's back in the channel here. And so the top of the channel is right here, right around 155, 156. If it can bust through that level, then the 50 and 100-day simple moving averages here at 170 and 172 will be the next target. Okay, keep an eye on SRNE. Big drop here. It bounced today. Check out the lower wick on yesterday's candle. People were loading. It wasn't like there was a big volume spike, but today it did close above EMA4 at 554. 544. The last close above that level was back here before the big drop. And so this is a bullish change in trend. If it can get above that 200-day simple moving average at 574, starts trading at 575 and above, that should be the signal that the bounce play is going to continue. If it stalls out at 574 or it drops below 544, that'll be a signal it's a risk to hold. Okay, let's look at SDR here. So we've got, interestingly enough, we've got oil under pressure today, but they decided to bounce the small cap energy sector stocks today. Go figure, right? Huge multi-day drop here for SDR. Kind of happened across the sector for these energy sector penny stocks. They were bouncing today. So basically, for this stock, it needs to stay above the 100-day simple moving average at 139. You can see it didn't quite get down to that 200, 300, and 400-day simple moving averages down here at 119, but it did bounce off of 125. And then, if it could stay above 139, you're looking for a move back up to EMA4 at 157. This prior support zone in June, that's going to turn into resistance right around 155 or so, 154. And so it's going to be tough to break, but if it can get back above 157, then it could reverse this downtrend. Right now, it's in a strong downtrend. A drop below 139 would be a sell signal. Okay, take a look at JONE here. Keep an eye on this one. It's been disappointing on these bounces. It's had nice runs, where it bounced here and it made a nice run up here. So that was a good trade, and it bounced here and only had a one-day move, but it had been going sideways and then they dropped it down. Today it did bounce. It looks like another bullish one white soldier reversal pattern formed. It was better looking earlier in the day when it was up above that middle Bollinger Band at 35. Of course, this is what Jones does, that they sell shares. They pulled it back and didn't let it close above. You can't get too excited about a stock like this when it's failing to get a new uptrend going. But if it gets above 35, then 40 will be the next level to break. You can see it had been stalling out at that 50-day simple moving average. If it ever finally closed above the 50-day simple moving average, that's where it could get interesting. Okay, so take a look at NOG here. This stock is breaking out today. It closed above high close horizontal resistance. The closing price here on July 10th, this doji, was the key level to break. That close above today does signal more upside potential. If it did drop back below that closing price, there is a gap between high of day yesterday and low of day today. A drop down there to 340 in the middle Bollinger Band would fill the gap. Since NOG is breaking out on the daily chart, the key is look at the weekly chart to try to find the next key resistance levels. If you don't find them on the weekly chart, then you have to go out to the monthly chart. We're finding resistance here. It's getting ready to hit it. You've got the high close here that it's trying to bust above from back here in 2017, and so it'd be really bullish if it could close above this red line for the week. It's breaking it right now, and then it's hitting that it's getting ready to hit that 200 week moving average at 395, that red line. That's going to be the big level to break. If it could close above these two levels, that's going to signal it wants to head higher. If it stalls out here, then you could see it pull back and test the EMA4. That level's been holding during the strong uptrend for the last few months since May. So as long as the EMA4 at 345 is holding, the signal is is to keep riding, but it has to bust through 395 to head higher. Okay, take a look at SSC here. This is one of those crypto stocks. It had a pullback. I decided to throw it in the video here. It's got like not really a great chart going right now, but it does have this uptrend, and it pulled back, and it's bouncing off of key moving averages here. You've got the 50-day simple moving average in the middle Bollinger Band, and so as long as they hold here and it stays above 228, that would be bullish. It's hitting all these levels: EMA's 4, 8, 13, the 400-day simple moving average, and the 100-day simple moving average. It's all about getting above 237. To get above that, you have the 300-day simple moving average at 247, and then the 200-day simple moving average at 273. It has a lot of work to do here, but you never know. It had a nice bounce today. Yeah, it looks like that's either going to be a bullish engulfing or possibly a bullish piercing line reversal pattern. Yeah, so we'll see if it can follow through tomorrow. And then finally, I'm going to leave you with GERN here. Keep an eye on this one. It closed back above the middle Bollinger Band. This is another one of those ones that likes to head fake. You know, it did make a nice run back here in May where you had a couple days where you could make a nice trade, but the last couple times it's gotten above the middle Bollinger Band, it's been a dud. So you can't get too excited, but you know, this is our signal to keep an eye on it. Now that it got above that level, if it can stay above 352, then it is in play, but it's going to need to get above that 50 and 100-day simple moving averages. Once above 381 and that gold line, that's when it could be a signal that wants to head higher. Notice it really had been struggling to break that level here in July. Once you see it close above, that would be a bullish change in trend. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. I'll post the link below the video. Thank you.